What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So we're going to be going over that Ortex data that we always like to cover. We're going to be going over some unbelievably bullish news released by Adam Aron, these Citadel lawsuits, and even one of them, there is threats of legal action against one of our members of the ape community as well. And in addition, we're also going to be going over a major warning that a major market correction could be coming in the near future due to the United States getting their credit rating downgraded. But before we get into all of that, I really want to say some things and get some of my thoughts out there to you guys. So this last week, in terms of AMC, GameStop, and these short squeeze situations that we have been going through and researching over the last 8 and 9 months, this last week has been an unbelievable win, in my opinion. Now, we are still down on AMC about 2% on the week, but what we're seeing here, and especially yesterday, is that we can make very big moves at any given time. We never know when these big moves are going to happen. Now, with all of the new info that has been coming out from this class action lawsuit, it just shows us that we were right all along, and those big institutions are scared. They don't like that we're uncovering a lot of this information, and we can see that by that Twitter flurry that Citadel has been coming out with. Now, they've deleted some of their tweets. They've put out some information that a lot of people are essentially debunking, and those tweets are essentially like sticking your hand in a giant great white shark tank. We are the sharks. They are going to essentially get hurt by coming into our realm because any information that they are going to give us, if there is anything wrong with it, we are going to be able to find it. Now, along with that, why would we really be scared about anything? We have done the research and we know the implications of this situation, but we need to have some patience. I know a lot of people have been in this play for a very long time, and I know those die-hard OG apes are perfectly fine with holding the stock as long as it takes, but I think some of the newer individuals are still getting to that point. But in my opinion, we have really crossed the point of no return. You are part of something that has the potential to not only be the greatest transfer of wealth of all time, but it could potentially change the world. Now, in this situation, unlike 2008, where the government bailed out a lot of these institutions, we, the retail investors, hold those bailout chips, and the apes get to decide the outcome of this situation. If the apes do not want to sell their position and let these institutions off the hook, then they will not get let off the hook. So what I really want to get across to you guys is that we are winning. We have the winning hand here, and it's just going to take some time to play out. Now, nobody knows how long it could be. It could be next week. It could be a couple of months from now. We have no idea, but everybody has really done the research in this situation, I believe. We are really in a good spot right now, and we do have a lot of good things coming. And I want you to think about how you would feel in 10 years looking back on after this situation has all played out, and if you were holding a position and then you ended up getting out. Now, nothing I say in these videos is financial advice. These are for educational or entertainment purposes only, and you guys can do whatever you want with your position. I just want you guys to think about the implications of what we have going on here and going forward. So before we get into all of that other information, if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So when we come over to this Ortex data right here, currently, we're seeing the utilization at 85.41%, slightly lower than what we would like to see. But again, we are still seeing that short interest near all-time highs. And again, what that shows us is that the shorts have not only not covered their position, but they are continuously adding to these outstanding shorts. Now, when we move over to this tweet from Adam Aron, we can see here we were able to buy back at par $35 million of AMC Theater's most expensive debt with its 15% interest rate. That saves us more than $5 million of interest costs annually. Progress is made when you take big or small steps. The important thing is that you are moving forward. This is incredibly bullish, in my opinion, because a lot of people, the naysayers against AMC, one of the arguments that they make is that AMC has a lot of debt and they may not be able to repay a lot of that debt. Well, right here just kind of proves again and again that the short thesis really doesn't hold that much validity anymore. Now, let's get into this one threat of legal action that we saw against a member of our APE community. So this is going to be the law firm that is representing Citadel Securities and Ken Griffin. And as we all know, Cat Stryker likes to run these essentially airplanes that have messages on the back of them, and they fly around different cities. Now, Citadel did not like the message that they wanted to show on this most recent airplane. So what they're doing here is basically threatening, if you were to put this line right here, Ken Griffin lied under oath, you would be subject to basically severe legal action. So what we're seeing here is that we're really getting under their skin. Now, I do want everybody to be careful because these institutions have a lot of money and they do not want to lose any of that money. But we are getting our message out there, which I do believe is an unbelievably good thing. Now, let's get into this situation that has to do with Citadel suing the SEC over the approval of a new stock order type. Now, this is very interesting. So this article is back from October 16th, 2020, and we're going to take a look at some new articles as well. The actual court date for this lawsuit is coming up on October 25th of 2021. So Citadel Securities sues the SEC over approval of new stock order type. So what Citadel is saying is that the SEC failed to properly consider the costs and burdens imposed by this proposal that will undermine the reliability of our markets and harm tens of millions of retail investors. Now, that's not what's happening at all. The lawsuit, which was filed on Friday, was reported by the Wall Street Journal, increases Citadel Securities' dispute over IEX's D-limit order type. Now, we're going to go into exactly what that is, but let's take a look at this article right here. On April 12, 2021, Better Markets filed an amicus brief with the D.C. Circuit supporting the SEC's approval of a new order type developed by IEX. The order type would help protect millions of Americans from predatory high-frequency traders. Now, Citadel is a high-frequency trading firm. A handful of high-frequency trading firms, including Citadel, spent vast sums to acquire sophisticated equipment and non-public information that gave them a huge and unfair advantage in the marketplace. Now, that is a bit of a wild statement. That is kind of more of a allegedly statement right there. So IEX is an exchange that is attempting to improve market efficiency and transparency by creating a fair trading environment for all investors. So what this D-limit essentially is it's very similar to a normal limit order, but what it does is they have an algorithm attached to the market that is essentially going to detect when the national best bid or the national best offer is going to move, and they know what the high-frequency trading firms are going to be doing with the limit orders that are out in the market right now. So with this D-limit, what it does is it changes the actual limit order. It's very interesting. They would change it by about a penny, so there would be a lot less predatory trading out in the market. So this lawsuit doesn't necessarily have to do directly with AMC and GameStop, but it just goes to show that all of these large institutions, it is not just Citadel, there are a lot of them out there, are kind of leeching off of the market and using retail investors. And the fact that they do not have the access to the information or the technology to make these types of trades and using it against them. And IEX, the Investors Exchange, is trying to do something about this. Now, let's get into this market crash warning that was issued today. It's very important that everybody fully understands this because it has to do with the debt ceiling situation that we have been talking about. And it doesn't necessarily matter if they kick the can down the road with the debt ceiling as much as how they kick the can down the road. So stocks pressured after Fitch warns debt ceiling brinksmanship threatens U.S. AAA rating. As a reminder, just over 10 years ago, S&P downgraded the U.S. after that year's debt ceiling debacle prompted the rating agency to do the unthinkable and lob an A from the untouchable AAA rating, prompting a very unhappy response from both the market and the then Obama administration. So in that situation, there was about a 20 to 25% market drop. Not a good sign. Well, moments ago, Fitch lobbed the first official warning shot across the bow of the world's reserve currency, writing that the drop-dead date is just 17 days away and any debt cap brinksmanship between Democrats and Republicans may put pressure on Fitch's AAA rating of the United States. This is not good. In the statement, Fitch said that the failure of the latest efforts to suspend the U.S. federal government's debt limit indicates that the current standoff could be among the most protracted since 2013. Additionally, the rating agency believes that the debt limit will be raised or suspended in time to avert a default event. But if this were not done in a timely manner, political brinksmanship and reduced financing flexibility could increase the risk of a U.S. sovereign default. So what Fitch is essentially saying here is they do think that this debt ceiling can is going to get kicked down the road because that's what's happened every single time in the past. But the fact that it is so difficult for our government, the way it's set up right now, to actually just get it done and figure it out makes the United States less credit worthy, and it is possible that we do get our credit rating downgraded. And again, if that does happen, we are going to see significant sell-off in the overall market in the short term. But this past week, we did see the government funding bill get signed into action, so the government is not going to shut down. We are seeing the Evergrande talks start to quiet down, which is another bullish thing for the market. It creates less uncertainty. And this debt ceiling situation, in my opinion, is kind of the lesser of all of these evils in terms of what could potentially affect the markets in terms of a very significant sell-off, because they've been through a lot of these situations before and they end up figuring it out. But that is going to be the last thing that we need to overcome in order to maintain that bullish sentiment in the market going into the end of Q4. But again, there could be something else that pops up that our government or the Fed is not going to be able to control, and that could also cause a correction. So that is mainly going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I'm using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.